Good morning, everyone, and welcome to the European crossover webinar. And we're just about to go and get the German IFO. Reuters poll is going to be 92.2 for climate, and then new conditions 86.9 with expectations at 98. And we're just about a few moments away. Actually, a little bit longer than that, about 45, just a little over 45 seconds. Okay, new business climate comes in at just waiting. It says risen, but didn't say what. Okay, 92.6 for business climate. Current conditions, waiting for that. 87.9. And expectations. So a little bit better than expected on business climate. 97.5 on expectations, just a touch bit lower. And conditions are just a little bit better, somewhat in line with a little bit of a positive bent on these right here. And once again, IFO business conditions 92.6 versus expectations of 92.1. Current conditions 87.9 versus expectations of 86.9. Nice beat on that one. And then expectations just a tad bit weaker at 97.5 versus expectations of 98.0. And looking out, that's going to be it, other than we do have UK CBI distributive trades at 6 a.m. Eastern, and then at 8 a.m. Eastern, we will get building permits, which is a little bit earlier number. I mean, generally we don't have the data come out that early, which is at 8 a.m. Eastern. It usually comes down around 8:30, but 8 a.m. release for building permits. And then Johnson Red Book is not what it used to be. And actually, back in the day, Johnson Red Book used to come out at 2 p.m. Eastern. So this much later. I think then they moved it down to 11, and I guess now it comes in real early. It has been coming in for that time, but I think Johnson Red Book didn't used to come out till about 2 p.m. Eastern. And way, way, way back in the day, it used to be a big deal. Not very much of a big deal at all. And then 9 a.m. we'll get monthly home prices, and 9 a.m. Eastern also Case-Shiller. We'll also get consumer confidence at 10 a.m. That should be a mover here, as well as new home sales. Boy, a lot of that housing data all being released at 10 a.m. Eastern. Holy smokes. And then 10 a.m. Eastern, we will get Richmond Fed index, composite index, basically about a third tier piece of data on that Richmond Fed. Still well known, but it just doesn't carry a whole lot of importance. While the Richmond Fed's been around for quite a while. With that, let's go move these to the side. And I do have it on the charts. We'll get to the currencies in just a little bit, but I thought this was important as to the way the day played out yesterday and where we are with indices right now. So if you look at indices, put this a little bit into perspective, let's go and just take a quick jaunt into the indices, and you can see here with the NASDAQ, we pushed a little bit higher yesterday as we came into the equity open, and then we fell back, and here we are back up again, which really isn't much of a surprise. I'm going to go and get to that. And then the S&Ps, wow, we actually continue to push even higher here in the S&Ps. Holy smokes. We're going to take a quick look at gold. Gold kind of holding steady, and we'll get to the news. But let's go back here to the S&Ps, and then also the NASDAQ. And let me get to the equities. And why I'm saying I don't think it's much of a surprise that we're back here, but the action we saw yesterday. Now, we do have Jackson Hole, which is on Thursday, and we could see a big shift in FX in regards to the dollar, and even a big shift, not necessarily a big shift, but we could see maybe even an extension of this move in equities, which is why I believe that we're still back up here again. One of the reasons, and we'll pop in, take a look at the daily. So if you look at Apple, and this is on a 2-hour chart, on Friday, I posted this chart and was looking for 161% extension in Apple that would take us from the highs in January to the lows in March. 261% extension, which take us to 514. And that's exactly where we ended up going to. We went to 515 and 14 cents. We came back a little bit lower. The point is I'm looking at, and we'll look at the Apple. You can see that. We came into some key levels that I thought the market would, coming into Monday, would reach for, and maybe we'd fade back. And we did fade. I mean, we fell from 514 down to 495 before recovering an okay amount. We're a little bit better prior to that. And this is on a 2-hour chart. Let's go on and move this up here. We look at Microsoft, and you can see here it's still holding up very well, close to around 214. It's basically 213 and a half. We also took a look at Amazon. And you can see here we kind of finished in the middle of the range. Okay, and let's go on and check out another one. Look at Facebook here. Kind of finished. If it finished a little bit lower, it'd almost be like a gravestone doji. Almost. It's looks on a 2-hour. And we're looking actually on a daily. We actually have the 2-hour post right here. Now let's go on and move in. You can see Google. Same thing. A pretty good stretch up in here. And look at this is Apple on a daily. Oh, here I think we have NVIDIA. So you can see NVIDIA up in the stars. Okay, here. And then Tesla. Boy, do we have one kind of a heck of a run here in Tesla. Come back in here. Look at this. We've made it all the way up here to 2140. And then we turn around and fell $200 only to come back. And then lastly, here with Netflix, kind of made it a little bit higher, up to 502 before appearing back. The key that I wanted to go and notate here, or I guess you would call it the theme, is we were coming into some real key targets up in here, or key moves here, i.e. Apple, because it has a greater percentage, not only in the S&P, on the NASDAQ, but also in the S&P. It's the number one stock. So its impact is really going to be felt. One of the things that we've noticed is that the breadth, or among a lot of other equities, whether it's in the NASDAQ or S&Ps, has not been what we've seen in these primary stocks. So I look at here at the primary, for me, the top 8 stocks. This one actually, Tesla's not in the top 8, but there is I'm trying to think of which one I have here. It just escapes me right now, but since this was really moving quite a bit, I thrown in Tesla just basically trying to think, I guess for lack of a better phrase, for the mood of how it was trading, looking at the NASDAQ in general. And that really helped me out yesterday. But here's the thought. We hit some key levels, or we were coming into some key levels on the open, which I thought was going to happen. And then I thought we could fade, which we did. And then we faded some more. We actually were hold up okay. And then when Apple broke 500, then the bottom kind of broke a little bit there. although we ended up rebounding. Actually, we closed here at 503, but we actually came off of those lows. I think we had to make it all the way back up to like 506 before rotating a little bit lower. The key thing is that we hit those areas, and I thought that we'd see some profit taking. But coming into Jackson Hole, I'm thinking, well, they're probably going to come back up a little bit and don't stand ahead and try and fight this thing. And we've seen just that to a certain extent. Let me come back to you and I'll show you where it impacts FX also. So we're coming back into the equities. There we go. And to me, I thought, look, here's the move higher, okay? And then we broke pretty good, came back up again, broke lower, came back up, tried to come up and broke again. This is when Apple was breaking 500. And if you looked at if you looked on a 5-minute chart of Apple and the 5-minute chart of the NQs, it was almost trading like, they almost looked identical. And then we worked and it looked like we were going to slide back again, okay? And then we just started working hard. And I'm thinking, you know, one of the things that's at the 11, I think it was 626 was like the 50% back, kind of poked our heads above it, came back, looked like that's probably it. If you looked at it, thinking, and I was even thinking about this in the Asian session, I go, boy, that 648, I think 648 was like 161%, thinking that's probably a pretty good level. I go, you know what? I still think that as we come to Jackson Hole, it's going to have that bid because of potentially what could happen with Jackson Hole. If the Fed's going to let the inflation run hot, that will open the door for, i.e., the dollar to break lower, for gold to move higher, and equities to take another, you know, potentially an extra leg up, or maybe a little bit of a blow up. Whether it happens or not, I thought that that's what the markets would be anticipated. Once again, I'm glad that I didn't just come in and just say, well, this is really a great level in here, this 11,650. Let me just go and short it because that's probably about as good as it gets. Now you can see we ended up taking it up to 690. We're kind of hanging here. Maybe we'll pair back. The point is, the market still has the opportunity going in ahead of Jackson Hole. It has that idea that potentially we could see an even further move, i.e. for the indices. And if a Powell decides, well, I'm going to let the inflation run hot in order to keep these rates low for some time, you're going to see the dollar really come under some trouble. And gold take an extra leg up, and equities, same thing here. And we'll take a quick look at FX. Okay, here we are. And let's go on and take a quick look with the euro. And you can see here on the cash dollar index. So the euro we were looking for a move a little bit higher yesterday. And I think we're looking, I don't remember what, to be honest with you, I don't remember what we had for the, bear with me. We had 1870. Okay, so it came yesterday up to 1848, almost 1850. So it didn't quite make it that high, but here's the thing: we did push up in here, and then of course as the Nasdaq and equities kind of paired back, we slid, and we ended up finishing at the day's lows. To that right now, we're pushing higher here in the euro. If we take a look at it on a 5-minute chart, you can see we gave it a little bit of an extra goose up in here. The thing is that, and we're looking at the dollar. We saw the dollar add on to its gains. Potentially, like I said, it was coming to Thursday. I would expect the dollar potentially to look for it to be under pressure, because the thought is the Fed's going to probably just go and let this thing run hot. You know, we would look back and say, oh, the Fed wouldn't do this. Look, Powell's done everything to just like, whatever. If it's going to take us to let the inflation run hot, okay, whatever. Doesn't matter about anything else. So you'd have to think that it would follow in line with everything that's gone along. So we could really see a big move here. And, it just seems like every month there's one more big move to get by, one more big move to get by. And it looks like it's another one more big move to get by. And I think that he will allow it to run hot. Be interesting to see what will happen with the dollar, whether we make, well, I would think we'd make new lows with the dollar, and whether we sustain that. But that's going to be a big day. Looking back, and you can see here with the euro, it did sell off. It actually didn't go as low as those lows on Monday compared to Friday, and we're actually a little bit higher today. We just got the German IFO data. But the thing is that we're gearing up for Thursday, and I think that the markets are going to be kind of quiet until we get to Thursday, because Thursday is really going to be some big fireworks. It just seems like every time something's coming up, and it's the Fed minutes, and it's going to be big fireworks. It's a Jackson Hole now. It's going to be big fireworks. And boy, you just wait till the unemployment in September. That's going to be big. It just seems like it's always one more thing. But the thing is we are seeing those movements happen, and that's why I think, at least for equities, why we did see those come off, because we hit some key levels as we came into Monday's open. But you can see we've recovered and we held steady, and actually with the bid, even better than we were in Asia. So that's essentially what I'm looking at on that. We'll go on and let me just go on and get the news here. So the dollar on the back foot as trade talks buoy Asian currencies. The dollar slipped on Tuesday, and Asian trades exposed currencies rose after the U.S. and China both hailed a phone call between their top aides, top trade officials, as a success. That reaffirmed investors' faith that even though diplomatic ties between the two countries fray, the trade relationship can endure. The news lifted the Australian dollar and nudged the Chinese yuan. Sentiment and support for riskier currencies over the dollar was boosted by the Financial Times report, which said that U.S. authorities were considering fast-tracking approval of COVID vaccine after being developed by AstraZeneca and Oxford University. Moves were contained as markets were not expecting a breakdown of the trade deal. And looking ahead to a speech from Jerome Powell later in the week, which could shift the U.S. dollar in either direction. The broad pressure on the dollar helped the euro back over 118 by mid-morning in Asia, and the pound rose to 31.02. Kiwi, weighed by expectations of negative rates in the future, struggled for headway at 65.28. It's reassuring that despite the rhetoric, the U.S. and China still want to have an economic relationship, said National Australia Bank senior foreign exchange strategist Catrill. On the call, which has been originally scheduled for August 15, Trade Representative Robert Litzinger and Treasury Secretary Mnuchin spoke with Chinese Vice Minister Li Hu. The United States said both sides see progress, and China's Commerce Ministry calls the talks constructive. Elsewhere, the trade-sensitive South Korean won, I'm not going to worry about that. The Asian session moves returned some general pressure to the greenback, which had held up during the New York trade, defying a positive mood in the equity markets, which often drives dollar selling in favor of riskier currencies. Against the basket of currencies, the dollar dipped to 93.18, and it sits at a crossroads. Flat for the month after roughly 10% slide from last March to early August. Its short-term fate depends on whether Europe's economy keeps on the impression that it's outperforming the U.S. We did see a little bit better than expectations on the IFO, but it's outperforming the U.S. on what the market thinks the Fed will do next. For now, all eyes are on Powell's address to a virtual Jackson Hole symposium on Thursday, with investors expecting he will sound dovish and might speak to speculation that the central bank could adopt a more accommodative stance on inflation. Hence, we were just talking about that. Maybe not that y'all probably did go and already know that that's the expectations. But my thought was that that's what I thought that the equities were staying bid. We saw some volatility come into Monday, but we had hit some very key levels across the board, whether it was Apple and that 161% extension, or the moves that we saw up with Tesla getting up to 2100, and the Facebook had also hit stretch, and as well as we've seen a pretty good move in Amazon, and see those pair back, only to come back a little bit and offer a move with a bid here as with Nasdaq 100, as well as S&Ps still staying really firm at new highs. And hence I was thinking is that as we come into Jackson Hole, that's why you're going to see these things come right back up, and why we can see the euro once again holding this steady bid here. Probably the same thing across most of these major pairs. If we don't get dovishness, I expect you might actually get rates rising and pop up higher in the U.S. dollar, said Westpac analyst Emery Spitzer. I think what we're seeing now is any excuse to buy back the dollar as punters who have been short all the way down get quite nervous and take the money off the table. Investors are looking ahead at German's IFO. We just got that. We discussed that. Came in a little bit better than expected. Softer than forecast data on both continents last week suggests there is downside risk. Well, it actually outperformed a little bit better. If data confirms a negative turn in forms of macro outlook in Europe, then it'll be clear euro negative, said Terence Wilmot, that wasn't the case. 117 may be a key level that may spark a deeper sell-off. And with that, we'll take a look at gold. Gold held steady on Tuesday as a softer dollar offset pressure from an equity rally, while investors stayed away from taking big positions ahead of the Federal Reserve's Jerome Powell speech later this week. There's a lot of focus on Jackson Hole Symposium and Powell's speech. Markets are reluctant to commit to a direction until that happens, said daily FX strategist Ilya Spivak. We've seen a pullback in gold since the beginning of the month, and around the sense that maybe the Fed is not going to do much in terms of expanding its policy tool kit. The central, and I think, in the past, probably for the past year or so, a lot of people said, I myself thought, oh, they won't do this because of that, and they won't do this because of that. Now, this was even pre-COVID. But the Fed just keeps on and keeps on and keeps on. So there's no reason to think they won't. The only difference is going to be how the market interprets a move, or maybe it's an exhaustive move. But anyway, that being said, Central Bank has rolled out a wave of fiscal and monetary stimulus measures and cut interest rates to near zero to combat the economic toll caused by the pandemic, helping gold climb nearly 28% this year. Lower interest rates decrease opportunity costs of holding that non-yielding bullion and weigh on the dollar, making gold cheaper for investors to hold their currencies. The dollar index fell against its rivals on Tuesday. You can see here, and the potential maybe that gold would roll over. We've had a pretty good move already in gold, but like I said, if Powell opens the door to let inflation run hot, and I mean, his modus operandi has been just that. I mean, just, keep, more cutting and cutting and cutting and cutting. I mean, this was even before COVID. So why would one think that he's going to all of a sudden say, oh, no, we have to be a little bit careful? It just doesn't add up. And don't forget, right now, we didn't get they still haven't come to a deal on unemployment benefits and other possible help between the Republicans and the Democrats. So we can't say, oh, well, they already struck that deal, maybe he's gonna maybe not be so aggressive. Well, we don't have that. So really the case, the door is really open for him to be just that, and why I think we have this bid here in equities despite that sell-off we saw, and why the dollar is going to be pressed up against all the way leading into Jackson Hole. So we'll see where we're at. We'll go and move into the analysis at this point. But I think what I was trying to do is lay the table for why I think some of these moves have happened and why they've turned around and come right back. So we'll start with the euro. So the euro bounced back in the early portion of Monday's session, but faltered closing on its lows. Bias chart support will be 1739 with resistance at 1860. Let's go mark that off. Onto the cable. Cable on Monday closed on the lows in a tighter range session. I mean, compared to, you can see, look at this up, and I mentioned before, the up, down affair. And boy, these were some wide ranges. Support will remain 29.83 with resistance at 31.10. You can see we kind of poked up here. The high so far, 31.12. Okay, so, and once again, it's going to be 31.10. 29.83 is going to stay the same. Let's go move into the Aussie dollar. Well, surprisingly, we didn't push much higher. Holy smokes, man. The guy on the squawk really cranked up his volume. Sheesh. Blasted in my ear. But anyway, we saw that we got the phone call between Mnuchin and Leitzinger with Vice Premier Liu, and was supposed to be constructive, all good news, but it really didn't do much here for the Aussie dollar. Let's go and take a look at the review. So the Aussie began the week challenging the 72 level, but slid back to the close at the lows of the session. Resistance for Tuesday will be 71.95 with support at 70.95. And on to the Kiwi. So the Kiwi closed slightly lower in a tight range day. Bias chart support and resistance will remain the same. So no changes here on the Kiwi. We'll pop that up. And you can see it was a tight range day indeed. Now, as I mentioned, is that it's having a tough time because of the potential, which who would have thunk it, but the potential for negative rates going out into the future. Now that future is going to be actually into 2021, but nonetheless, I mean, it's actually holding up fairly well because once again, those expectations for negative rates are certainly there. Let's go on and move into the dollar CAD. So the dollar CAD was able to recover from its test of sub 31.50 to close above 32 even. Resistance will be 32.68 with support at 31.60. So we're just trading relatively quiet here. Very quiet. Probably will stay quiet ahead of Jackson Hole, I would think. We shall see. And let's go into the peso. don't think there's any changes in the peso either. Yeah, because we stayed. Yeah, so no changes here in the peso. Look how tight that range was here. So no changes here in the peso. 21.85, 22.14. And moving on to the dollar yen, there was no changes in the dollar yen either. And it was a tight day yesterday. Not as tight as compared to some of the other pairs, i.e. the peso, but wow, look, we did go on and add on to this. So a little bit of a surprise here. We've kind of clipped on to this move here. Let me see if we did notate anything here. Yeah, we did have some analysis. The dollar yen traded in a stagnant range on Monday. Resistance and support levels will remain the same. We'll go and take a look at that. We are at 614, but this is a bit of a surprise. I thought that we were going to stay relatively quiet, and we have not. If we were to push up here, it's going to be this 647, which is key. We're not that far away from it, actually. Right now, we're 19 pips away, so we will update this for 647. And on the support side, it's going to be that opening right there, which is going to be 573. Let's go into the cash dollar index. So the dollar index continued its mild rebound on Monday. Resistance on Tuesday will be 93.65 with support at 92.93. And on to the cross rates. A very, very quiet session. Look at this yesterday. So no changes are going to be here in the Kiwi, Kiwi yen that is, 68.59. And on the other side, 69.54. So no changes here. Let's go and take a look on here to the euro yen. A decent little move here in the euro yen. Resistance right there, smack dab in the middle, right there, that close and open, which is going to be 25.83. That's going to be a good target for them to go to right there. You see right there? Right there. The close here. Yeah. Open here. Good little target for them to go to. Support. We can take a look at a 2-hour. Boy, that's a nice, healthy move, too. Support would be right there. Come across. We can actually even mark it. $25.10. And move into the euro odd. Boy, nice moves here on the euro. We had 65.26. Yeah, I still like that. 65.26 on the upside. The downside, though, we'll go with the 64.10. Basically, would be a risk, although I think we could even move that even a little bit higher. But that'd be a risk. Moving on to the Euro Kiwi. 81.44. I still like the 81.44, which is coming in right there. And on the downside, 79.62. Obviously, we're doing a little bit better. Let's go with this. You see the high right there? That'll be support, which would be 79.96. We'll move it on to the Aussie yen. No changes here in the Aussie yen. Look how quiet it is. So no changes. Upside 76.47, downside 75.23. We can probably tighten up the downside just a little bit. We'll move it right there, which would be 75.41. And let's go move into the guppy. Nice little move here. So I guess the yen is having a little bit of trouble itself. Let's go and take a look on the 2-hour chart. We're at the 50% right now. You see this level right there? That's just above the 50%. That comes in at 39.25. Yeah, I like that. 39.25 on the upside. Yeah, I actually gave it more room here. Right now, we'll stick with the 39. We'll move it down to 39.25. Let's see, support coming in right there. Which you can we can probably move it a little bit higher. Right here, 38.54. And lastly, let's go on and move into the sterling odd. No changes. Look at that. Boy, is that quiet. No changes whatsoever. So that'll do it for us here. That wraps up the FX. And we are seeing NASDAQ push a little bit low from those levels. We'll take a quick look at that. You can see here we've dipped back a bit here. It looks more extreme here on the 1 minute, although we'd come all the way almost up to 18,690. You can see here a little bit of a dip back on the 5 minute, but all that does is take us back to that same place. Remember I mentioned that was like a 61% back. I thought yesterday I even actually had a level there. I was actually had a limit there to offer at 18,648, but that was like when we were, I think, right in here, and we came up a little bit short on that. But like I said, when it got up there in the Asian session, you can see down here, I was like, well, I'm not going to touch that now. Wouldn't be at this point. I think based on what I was saying about the Jackson hole, we'll probably see, I didn't know that we was going to continue to move high, but I thought we're going to probably maintain around this area. And sure enough, we took it all the way up to 18,690. And now we're just kind of coming back to that same area. But other than that, that's about it. Thanks for joining us here on the European crossover webinar. And we'll see you in the chat room.